Well, welcome back to another Market Open live stream. We have a little bit of a problem. Because there's some bad stuff that happened this morning, and I'm going to talk about it. Well, obviously, bad. Okay, so this morning, the ECI, this is a very expected or anticipated report from the Federal Reserve. It's not one that we talk about so much, sort of catalyst-wise, generally in terms of the market, because usually this isn't a problem. And the ECI gives the Federal Reserve more sort of ammunition and concern in terms of hiking rates, right? Anyway, the ECI is also something that can sometimes create concerns of a wage price spiral. Remember that the wage price spiral is something that we were concerned about having in January, very concerned about having in January. In fact, that was one of the reasons that I'm like, we've got some serious issues here. The ECI was not the issue in January. In January, we actually had wages rising at a month-over-month rate that was outpacing inflation. Now, that ended up getting revised away in February, so we didn't actually have that problem, which was very interesting. But anyway, now we have something else, and that was through the employment report. Now we have something else, and that's the employment cost index. And what it says here today is that the ECI has jumped by the most on record ever at the start of this year. Heightening concerns about persistent inflation, the ECI advanced 1.4% in the first quarter. 1.4 times 4, I guess that'd be annualized about 5.6%. According to the Labor Department figures released Friday, that followed a 1% advance in the final months of 2021. And what's interesting about the final months of 2021 is December is when the Fed decided to kind of flip on us, right? So I guess that makes the coupon code back to the moon maybe something a little bit that's going to get delayed a little bit. It's still down there. So we still want to go back to the moon. You know, these earnings are coming in not so darn terrible, although Apple's guide yesterday was not as exciting as their earnings were. Q3 guide concerns on China and lockdown issues and supply chain issues. Not great for Apple that they came out with that, but definitely a realistic guide. And then, of course, Amazon, complete disaster. I mean, for Amazon to be down 10.6% is insane. I mean, people are now calling Amazon the next Netflix. It's crazy. So, but anyway, back to the ECI a little bit. The projection for the ECI, the median projection was a 1.1% increase, and we ended up getting 1.4%. So that's quite a bit. And let's see here. Let's see what else we have in the report here. Wages and salaries for civilian workers climbed 4.7% from a year ago, which this is all in the ECI, which is still, in my opinion, like a lagging report on how much wages are really going up, because I quite frankly think wages are going up more than this. But I mean, almost every single earnings call talks about how costs are going up, especially in compensation for employees and everything. So workers' wages, yeah, okay, but this is also interesting. But because of this report, even though it came in substantially higher than expected, we're still not seeing wages go up at the pace of inflation, which is bad for employees, but also good for preventing that wage price spiral. So quite interesting. We'll see how things evolve here. Now, the other thing to keep in mind is yesterday we got word that Elon Musk actually filed 5 documents telling us that he sold 4.4 million shares of Tesla on the 26th, which was Tuesday, the day after the Twitter deal was announced. Now, that day we had about an excess volume of Tesla shares of about 20 million shares. 20 million shares of excess volume, and he sold 4.4. That's like a 4 to 5x of volume. And I think that extra X of volume was just literally fear that Elon was selling, which he was, which probably wasn't too difficult for people to presume, which honestly leads to then more selling. I mean, we suspected it, and a lot of people suspected it, so it's not like it was a big secret. I think probably the big blocks coming in was a little bit of a tell. Very, very large chunks of Tesla were sold at given times. You could kind of see, normal open here, normal volume, and just all of a sudden these massive sale ramps off of the opening bell. Like the fact that you're having as many sales at these blocks over here, even over here, after the opening bell, a little surprising, and then volume really chills out. So it really shows you this. There's Elon. I see you, Elon. I know you're in there. So pretty wild. But anyway, so obviously not seeing wage price spirals huge, but still seeing rising wages, which the ECI is probably one of the most closely watched indicators from the Fed. And this, unfortunately, not so great for the whole inflation debate. But who knows? Maybe this means now we're at peak. I don't know. Who knows? Who knows? Anyway, okay. So this has led the 10-year to rise again. I mean, the 10-year is so volatile right now. It's quite crazy. We were at 3%. Then we fell to 2.74%. Now we're at 2.91. I don't know. I don't know about you, but it's crazy. I also talked to Ross Gerber yesterday, and if somebody can help me figure this out in this chat, I would like to make a video on this. But this is I don't know, personally I think kind of important, and I'm surprised. I'm honestly shocked nobody's talking about this. But let me put it this way. When I read something in an earnings report and I'm like, what the hell? Like, what are you doing? It doesn't make me want to trust management. That makes me concerned. Now, we've touched on this before, but I just briefly want to bring it up again because now it's not just me who's like, what are you doing? Even Ross yesterday, he's like, this looks like fraud. Now, we're not, trying to like disparage T-Doc here, right? This has nothing to do with Cathie Wood either. This has to do with what looks stupid. It just doesn't make sense. Okay, look at this. Remember how they had a massive write-down of $6.6 billion? So in their earnings report, all they do is say $6.6 billion write-down impairment to goodwill. First of all, why the heck does the company, T-Doc, a company that has a market cap of about $5.4 billion, obviously it was closer to like $10 billion before here, but why do they have goodwill of $14 billion on their balance sheet? Okay, sus out of the gate. They have more goodwill on their balance sheet than their company's worth. This doesn't make sense. That could be like, oh, well, we have goodwill. Like goodwill, just so you know, for example, is like your brand, right? People are willing to pay a premium for Disney because of their impression of the brand and quality. However, when something crazy happens, like the woke politic nightmare with Disney, Disney's brand could get slightly damaged, and that could lead to an impairment of goodwill. Well, with Teladoc, they don't tell you that their brand got damaged by the tune of $6.6 billion. Instead, what they say right here, folks, is we're taking a $6.6 billion impairment. The goodwill impairment is triggered by a decline in the Teladoc share price. And this is like, wait a minute. The share price has nothing to do with the consumer's expectations, like the consumer's impression of your product. They're literally totally separate things. And besides, the share price is related to how much consumers are actually using your product, right? So if anything, the consumer using your product is already built in. So the share price should have nothing to do with goodwill. The share price has to do with your brand. And the fact that they say, well, our share price went down, and now we're taking a $6.6 billion write-off. Not only did our share price go down, but, things have gotten a little harder in the market. Like people are using higher discount rates, and we're decreasing more market multiples for peer groups of other relevant, healthcare companies. And we think we're going to have lower cash flows, so we're going to reduce our goodwill. None of that has anything to do with goodwill. This is it smells really fishy. Really fishy. Like goodwill no, it has nothing to do with your stock price. Like a consumer who goes to Disney doesn't say, I like freaking, I like Mickey Mouse because the stock price is higher. Like maybe we do as stock investors, but you don't get like half your company's value in goodwill because of the stock price. It doesn't make sense. So, and that is all they said about it. They did not take a single analyst question on it. They did not explain it in the 8K filing, and they did not explain it in their earnings call at any point. They just took the $6.6 billion write-off and walked away. And what did Cathie Wood do? She bought $20 million of TDOC. I'd really like to know what the hell is happening here, because it just seems like fraud. That's it. That's all I got. I'm sorry. It just pisses me off. It just doesn't make sense. Like don't do shady shit. Anyway. Another thing that's going on, which I thought was kind of interesting, is Hershey's. And I've got like probably 10 earnings calls to report on in a few hours here that I've been going through. But this was crazy. One of the earnings calls, we find out that Hershey is actually suggesting that what people are doing is they're going to the gas station more because they're not filling up their tank all the way because gas has gotten so expensive. So they're half filling up their car tanks. And every time they go fill up their car tank, they're still going inside the store to buy a freaking chocolate bar. So Hershey's like, this is great. People are going to gas stations more and buying more chocolate because gas prices are up. People are going to gas stations more. Not because like they're doing the rational thing, which would be drive less. They're just going to put less gas in their car. I don't get it. I really don't get it. I really don't get it. I really don't get it. But then again, I'm also in a vastly different financial position. So I don't know. Maybe it's like, hey, I got $50 budgeted for gas this week. That's all I got. But I'm still getting my candy bar. Gosh. All right. Well, anyway. It sounds like they need to take the Stocks of Psychology of Money course link down below, because that is some broken psych. I will say though, TDOC, along with a lot of other companies, Pinterest and so on and so forth, a lot of companies talking about how much advertising spend is actually going. What have we been talking about on this channel for a while? I think that advertising spend is going to go up. January, Feb, we're good for advertising. March was great for advertising. Very interesting. Well, maybe if it was like this acquisition of this whatever company here, as someone suggesting, you watched a discussion on this, what's happening here is we're making the assumption that it's Livinggo. Now, it's okay to try to read between the lines, right? But why then in their report are they literally telling us, oh no, it's because our share price went down? What are you talking? That's double dipping. No. Shady. Anyway. People gotta eat. People don't gotta eat candy bars, dude. All right, here we go.
And they are putting people, FINRA fine them, but they keep making it easier and easier. Now they have a lot of assets in crypto. Moving into crypto is very smart, but I just don't see anything here not until the clients figure out the way the market really works. It's really a shame.
Well, I want to get to it in a second. Here's the opening bell. And at the big board today, Advisor shares celebrating the recent listing of the drone technology ETF at the NASDAQ, celebrating its IPO of the light bio targeting age-related.
UAV, drone targeting ETF. Man, people are coming up with all sorts of crazy stuff now. My goodness. All right, let's see here. All right, now, what do we got here? Almost $80. So what do we got? I don't understand what you mean with $80 here. So oh, you're talking about Weibo. Okay, yeah. Kevin Williams says you do that because it's only a matter of time before the gas comes back down. I mean, are you driving a lot or do you drive rarely? I mean, it's one thing if you rarely drive and you're like, yeah, I'll just put a little bit in. Gas station lines have gotten longer because people are going more often. Yeah. You can't buy candy if you fill the tank up all the way. People got to eat, Kevin. Come on, man. People got to eat. Ay. All right. Well, yeah, Amazon at a 52-week low. We should create a Goodwill ETF and just rug pull. It already exists. The ticker symbol is NFT. Oh, sorry, I'm being a butt. It's not wrong. It's literally not wrong. But anyway. So Amazon down 11.57%. Robinhood dropping another 6%. Toast. Oh my gosh. I did a video on Toast talking about how $55 was insane. People got really mad at me. They're like, whatever, Kevin. I'm DCAing Toast. Toast is God. Dude, it's $19. Etsy. I was really proud buying Etsy at $70 like in 2020. And then I was really happy when it went over $200. I mean, it actually went quite a bit over $200. I ended up selling it at like, I don't know, 180 or 190 or something like that. So it was great. But now it's 96. It's just like, what the? My gosh. Things have changed. Look at this Shopify. I remember when Shopify was $1,500. It's $429 now. This is just insane. It's also quite depressing. Matterport, 2.36. eBay, Solana, right back under 100. Ay. Oh, there was also another. There's another update on incomes I wanted to talk about. Let's do that really quick. So here's a QQQ for you today. Oh, Tesla's up about 3%. All right, so 5 key takeaways from the U.S. first quarter GDP. Well, we talked about that, but I wanted to find the savings rate. Oh, yeah, there we go. The personal savings rate also declined, a sign of how inflation is biting into spending. Now, obviously, this is all like past data, but one of the things to keep in mind is we do expect that personal savings rates would go down. That is happening along expectations. However, banks still expect that individual bank balances are actually going to go up rather than down this year, which is quite interesting because that really implies that, even though the savings rate might be going down, it's still higher than what it previously was. All right. Cool. All right. So what else do we have here? Let's see. Yes. We got some big catalysts coming up, and this is also something to pay attention to. Next week, we have lots of things. Well, first of all, we get the jobs report on May 6th. We have the FOMC meeting on May 4th. We have Victory Day on May 9th. And then I can't remember now. It's either the 12th or the 13th for CPI. So the next 2 weeks are probably going to be quite insane, dare I say. Yeah. Looking at this here, we have the April CPI data. Oh, it's actually May 11th. Okay, so I would write that down. May 11th, CPI. May 9th, Victory Day, when Putin is suggested to declare basically victory over some parts of Ukraine. And some people are hoping that even though things might get worse before that, they get better by the time that happens. FOMC meeting next Wednesday. It's Tuesday and Wednesday. Obviously, we'll have the report to cover on Wednesday, so we'll get to do a lot of talking about that one. Woo! And then the jobs report next week, Friday. So catalysts galore. It's going to be very interesting. Then we have Tesla up 4%. Affirm Okay, what's happening right now, IMHO, is you've got a lot of retail, possibly institutions, coming in and basically trying to swoop up some La Tesla, because they realize that Elon Musk's selling pressure is gone. Great. Imagine if Elon Musk started doing stock buybacks, and he's like, hey guys, I'm making so much money on Twitter that I'm going to start buying Tesla shares. Imagine. All right. China has been a seller of U.S. treasuries in Q1 and will reduce selling. We estimate that China was selling United States treasuries because as a result of seeing the People's Bank of China foreign exchange reserves decline, it's trying to like get away from Zedala. Then we've got what else here? Yeah, somebody actually super chatted, and I didn't respond to it. Sorry, but there's talk about taking a peek at what's going on in like Japan and the foreign exchange market. There's a note here on this, and there's a lot that's going on here, but basically there's a suggestion that Japanese officials have backed themselves into a corner, and macro funds are trying to break the Bank of Japan. Which last time we've seen people try to break banks was like in the 70s when we left the gold standard, and this could create buying pressure actually in Japan for treasuries. They're suggesting, which the more people buy those, the price goes up, yield goes down, which will be very interesting. So it's something to pay attention to, but I don't know how big of a catalyst is this here for us right now, but it is something to pay attention to. So then we've got let's look at curves as well. The break-even inflation numbers have been going up over the last few days, and they have not gone up as much as we've seen them go up in the beginning of April. Actually, even mid-March. Mid-March to the beginning of April, the 5-year break-even rate like skyrocketed. We were at some of the highest levels for the 5-year break-even. And a lot of folks believe that that was also one of the contributors to the Federal Reserve deciding that's it. We're basically going to say we're going to go 50 here because we had the skyrocketing break-even inflation rate, which we generally look at the 5-year for. The 5-year for that. And if that starts going up again before the Fed meeting, it's not a good thing. That's a problem. So we'll see. Elon Musk not about money and Twitter. Well, look, we all know that's what he said. I've echoed him saying that before. But let's be real. If he makes lots of money in Twitter, he can buy more Tesla. He won't. He'll go buy another company. He'll buy Coca-Cola. Anyway. So, Tesla kind of volatile here, sitting around that 38.2 line. Let's go ahead and let's get a look at the 10-2 here, or I'll give you a readout of the 10-2, and then we'll also take a look at that 5-year, because it's going to be not so great for the Fed's meeting next week if this keeps worsening. So the 10-2 kind of flattening again. It's only at 18 in terms of basis points right now, so that's not great. And then the 5-year, yeah, it's up again today. It's just not great. I'll give you a quick little here. Let me airdrop the screenshot to myself so you can see it. But that way, you can see what I'm talking about to catch you up with this. All right, here you go. On screen now, it's your 5-even break-even inflation rate, and you can see we have these odd little spikes here in April, but we had that giant, persistent run-up, that rising wedge almost, right, in March. And it was nice when it came down. It was also nice when just like a week ago we were falling below any level of March and April, but now we're popping back up a little bit. So not so ideal. The buy to dippers are out of money on Tesla. They are losing the fight against the other sellers. Barcoding here on QQQ might be setting up for a sideways day. Let's see some big movers and let's see what else some of the suits are saying. Amazon still sitting at about 11% to the downside. DD, API up 10%. JD, Li Auto, wow, Dwack, Xpeng, Neo. What's with all the Chinese companies being up today? I also just can't believe that Neo's at $17, but all right. Cheesecake Factory. Still under 40. Let's listen to Jimmy Bo for a moment while I see what the other suits are saying.
And maybe that's okay. Maybe that's okay.
You mean the heat's off because Elon has arrived into the social media world?
Well, also the heat's off because Zuckerberg has said, you know what, I'm going to do the metaverse, and what we're going to do first is teach. I'm going to use the Instagram platform to be able to help small business, and we're going to give small business money. I mean, they pivoted. To, I mean, and by the way, Vlad Tenev should listen too. When you're just a technologist, you must pivot to be more than that these days. Tim Cook obviously is the person who you most emulate. Now, Tim Cook is not going to like the fact that I said that Zuckerberg in the same line. I don't mean to, because Cook's here. But Mark Zuckerberg is trying. And by the way, TikTok is Chinese. And one day that's going to matter if this Cold War gets a little hotter.
It's a little worse.
You know, look, if you won't give people your vaccine, American vaccine, because it's American, you'd rather have people starve and stay in a lockdown? How much do they hate us?
Well, and to what degree does the populace revolt?
The people don't hate us. The people are fabulous.
Meantime, guys, we're watching the market down about 100, despite all the news.
I think it's quite interesting, this using the metaverse for education. But I also think it's a hilarious comment to say Vlad should listen. You know, Ross Gerber made this interesting point that Robinhood, you know, kind of got their whole platform excited about options and basically screwed everyone because options are so dangerous. I always say, like, they should be like less than 1 to 2% of your portfolio. Yeah, now you've got some problems over at Robinhood. Layoffs, huge miss on numbers. It's like a 50 mil revenue loss. Kind of interesting point. So when Jim Cramer here says, hey, they got to innovate a little bit to get some people back, it's kind of not wrong. All right. See what the other suits are saying while the QQQ drops a little bit. Tech stocks falling, and the sustained tech drop may be linked to China's COVID trajectory. Apple, among leading decliners, marked an initial bullishness, but when the company warned about expensive supply chain issues due to China's lockdowns, the shares went down. The warning was keeping with a host of other hits to company profits due to China's COVID zero approach, from semiconductor firms to automakers to Caterpillar. Yet COVID-induced problems will probably wane as the disease does. You know, I read the Caterpillar earnings report. I did not know that they have already sold 500 self-driving, fully autonomous mining trucks, like hauling trucks, you know, dump trucks, basically, giant dump trucks. And you know, I mean, like, what are you going to screw up if your dump truck accidentally runs over a rock? You know, like, your risk is substantially different than Tesla full self-driving, where they're like people in other cars. But I thought that was really cool. I didn't know Caterpillar had self-driving dump trucks. Now I do. I mean, I know John Deere's trying to get into it as well, but I don't actually think they've sold many functional versions yet. So we'll see. We'll see. It's when the dump truck accidentally runs over the car. Well, yeah. Someone says, I used to change the tires on those. Well, aren't those tires, like, you know, taller than us? Like, those things are like massive. All right, so let's see here. U.S. data, bad on inflation, good on consumption. Arguably the most important data point in today's personal income and outlays print was the employment cost index, whopping 1.4%. We talked that. Talked about that. That pretty much seals the fate that the Fed will raise 50 basis points next week and adds the likelihood of another jump going forward. Markets have been nervous about decelerating economic and earnings growth due to the shock and fall of real GDP and disappointing earnings. But inflation is more important to the Fed's reaction function. The ECI will exacerbate the Fed concerns that inflation will become embedded and force it to react aggressively. Front-end treasury curves sold off on the news, particularly the 2 to 3 years. Ooh, what's the breaking news?
PME HQ with breaking news. Our April read on Chicago PMI expected to be out around 62. It ends up a big miss at 56.4. That's the lightest since 56.3 in February of this year. And that number in February was the lightest since August of 2020. Wow, did you see all the numbers this morning? Income about as expected, but spending double what's expected at a time where inflation's way more than expected. And all the Fed's personal favorites on inflation were hot, hot, hot. Buckle up. Interest rates are going up. 2s and 3s are on pace for cycle high yield closes. 5s need to get above 298. 7s need to get above 298. 10s above 294 and 30s above 3% to accomplish that. But they're getting very close. Keep tuned to the markets and stay tuned to Squawk on the Street because it'll return.
This guy's funny. He's been a bear and he's not been wrong, you know. But it's always really entertaining. It's like, big miss. All the Fed's favorites. They're gonna hike on you. Yeah, I mean, he's not wrong. Like it's what's so confusing is like we're looking at earnings like daily and we're just like, what? Everybody's spending like mad. Every piece of data is coming in. People are spending like crazy. But the markets are trading Fed fear, Fed FUD, you know? It's like they say, don't fight the Fed. Okay, crazy. Quick quote says, transitory worked out well. Don't worry, the recession will be transitory. 6 feet for those wheels. That's crazy. Can confirm trading options with 100% of portfolio. Bad idea. Oh, God. Yes. The thing is, people on average losing large percentages of their portfolios on options will either leave or run low on money. Yeah, totally. Agree. I only buy long term now, so my transaction volume has basically dropped dead. Yeah, that's the other thing. I mean, if you're a buy and hodler, you know, how are you making money for the platform? You're not really. But that's not your job. Imagine mining equipment that goes into the mine and returns with bucket loads of lithium and the whole process is automated. Well, that will happen in the future. But yeah, that's so far from that today. Soon, though. I don't think it'll take long. Commodities will get real automated. All right, so Musk's Tesla stock sales top $8 billion. Oh, my gosh. Musk disclosed an additional $4.5 billion worth of Tesla stock in new regulatory filings today, following yesterday, bringing his total to $8.5 billion in the wake of his deal to buy Twitter. Tesla's chief executive officer offloaded more than 5 million shares on April 28th, yesterday. That's when we went down to like 820. And that followed disclosures late Thursday of 4.4 million. Musk has now disposed of more than 24 billion worth of stock over the last 6 months. Wow. World's wealthiest man has reached an agreement on April 25th to acquire Twitter. Yep. But hey, he said no further plans to sell Tesla, so we'll see. Temporary discount opportunity. You know, it kind of does somewhat at least feel like he's almost trying to like look out for the consumer. In that he's like, you know, hey, yeah, I just dumped on you, but I'm done. You know, the heads up is kind of like, you can buy now. Here's Amazon down 12.3%. It's insane, man. Hey, Twitter's up to 0.28 or to 49.24. Apple actually went green. You know, Apple was red in the AM here and actually went green. Affirm's up a bit. Trade Desk is up. Look at that. Even TDOC is up a little bit today. I mean, it must be a better day if TDOC is up after that insanity. Crazy. Yeah. So what else? Let's see. Let's see what else the suits are saying. Suits usually always have something to tell us. All right. So Putin, gas for rubles gambit. Let's see. Kathy Wood's flagship set for worst ever month with 26% tumble in April. Wow. Ouch. U.S. seeks urgent data on COVID relapses after Pfizer drug Paxlovid. Oh, great. Are you serious? U.S. government researchers are planning studies of how often and why coronavirus levels rebound in some COVID patients who have completed a 5-day course of the treatment of Paxlovid. This is supposed to be that thing you take when you're not vaccinated, or like your vaccine's worn off or whatever, or just not working. And it's like you're going to have a bad time in the hospital. So they give you Paxlovid. But apparently, people now taking Paxlovid are relapsing, and they're just getting COVID. Or they're falling sick after this. Little is known about the rebound cases, including how frequently they occur and whether the highly transmissible Omicron variant played a role. While there's no proof that it's caused by the drug, doctors say they need more information about what action to take when the virus surges in someone who's just been treated. Oh my gosh, man. Like, this is why, man, betting on pharmaceuticals just makes me so, like, depressed. I don't. Like that, I don't, because I just know that I don't know anything about pharmaceuticals. So I'm just like, I just won't touch them. I can't. I just can't do it. I can't bring myself to it because it's like, oh, the vaccine, yay, it's going to cure everyone. Don't you remember, like, when the pandemic struck in March of 2020, everybody's like, damn, I hope they come out with the vaccine soon, right? Like, everybody wanted the vaccine in March of 2020 because we thought we were all going to die. Obviously a year later when the vaccine's like out and getting distributed, everybody's like, no, my choice, my body, my choice, which is fine. I mean, COVID obviously wasn't as, it was terrible, but it wasn't like a plague where it's like you had a 50% chance of dying or something like that, right? It's like 1%. It's still bad because a lot of people are still going to die. But anyway, but then we find out what the vaccines aren't actually that effective. You got to get boosters like every 6 months. And then we find, and even at that, it's not even that effective. And now we're finding out that Paxlovid, the thing for the unvaccinated folks who are like, please don't let me die, are taking it as like, you're still going to get hit. It's like, wow. Just, okay. All right. Just, wow. That's all. It's terrible. Just, again, another reason why I'm just not going to invest in pharma. That's all. Like, I'll go buy more Tesla. Oh, dear. All right. What else? But Kamala Harris is like 4 doses of the vaccine. Didn't she just get COVID? Oh, yeah, you said that. You wrote that. You actually wrote that. Yeah, there was an article yesterday. It was 2 days ago. I was reading it. I was flipping through the newspaper, and I'm like, Kamala Harris gets COVID. And I'm like, are we still reporting this crap? Like, is that still news? I mean, I guess it is. All right. So let's see here. Now, so the big news today is that ECI and the PCE numbers both are bad for the Fed. Here's an interesting one. What does a nimble Fed mean? This is a suit writing for you, okay? Oh, the Fed's just being nimble, everybody. Don't worry. They're just being nimble. In the aftermath of the huge print of the Employment Cost Index this morning, the MLive team is debating exactly what it means for the Fed to be nimble. Do you imagine? It's like, all right, everybody get your suit on. we're gonna debate what this means. Oh, and this is a surprise. Not. Nimble means an accelerated hiking timetable until there's an indication that economic growth is severely impacted. Duh. Like, y'all had to have a soup meeting for that? Y'all had that's what you had to have a soup meeting for, to tell us, well, yes, it makes it appear the Fed's going to have to raise rates more. Duh. So dumb. That's exhausting, man. I can't read this crap anymore. Oh my gosh. QQQ is recovering nicely. QQQ popping up a little bit here. Tesla up 5% now. And look at that. Nice curve on Tesla. I like to see it. I like to see it a lot. I got a big debate coming up about the biggest well, we got it's a Step Bro debate this Sunday. Live on the YouTubes about Tesla. I just can't believe that T-Doc's actually going up. I think people are like literally like, well, Kathy bought the dip, so we want to buy the dip. I can't go near that company with a 10-foot pole. You realize, okay, look at this. And I promise you, I like Kathy. I think there have been some faux pas. But this T-Doc one, okay. Look, the company is worth $5.6 billion. Fact check me on that, okay? All you have to do is type into Google T-Doc stock. And it literally pops up. It says it right there in your face. It says market cap, $5.6 billion, okay? So I want to know what y'all think about this. But we're going to look at their balance sheet. And we're going to go, that's consolidated statement of operations, cash flow, where's balance sheet? Here's balance sheet, okay? So the company is worth $5.6 billion, right? But wait a minute. What do we have right here under goodwill? Goodwill is $7.9 billion. So they believe they have $7.9 billion of goodwill for a company that has a market cap of $2 billion less than that. Like, this doesn't make sense. I don't know. I'm just hoping somebody in the comments can give me a rational explanation as to why you would buy this this Teladoc company. Anyway, is this a dead cat? Well, here's the thing regarding this dead cat bounce talk. We need bad news, really bad news, to be at 0%. We're above 0% now, right? I said yesterday that I believe that the opportunity to buy is now. And that's because we're at the 0% on the Fibbies. The times we've gone to 0% was massive Fed fear and war. Why would you not buy? If you're going to buy stuff, why would you not buy while you're at the 0 Fibbies? The only reason you wouldn't buy at the 0 Fibbies is that you literally think things are so bad that we are going to fall below the Feb 24 bounce, the March 8th bounce, the March 14th bounce, and the 427 bounce. You literally think things are going to be so bad that we're going to get news that brings us past that 0. So, like, if you're going to be one of those people when this stock market goes back to 50% and you're like, Kevin, should I go all in now? No, you should not go all in when we're at the 50% line. You should go all in at the 0% line. Not financial advice. University of Michigan Consumer Sentiment Index just came in. Consumer sentiment came in at 65.2 versus the 65.7 expected. Slight miss. Current conditions coming in at 69.4. That's a slight beat over 68.1. Consumer, and soon we need inflation expectations as well. I imagine these will come through. Don't have them yet. Anyway. I don't know that the market really is reacting to that at all right now. Tesla's up like 6%. Oh man, CoffeeZilla video, dude. I love CoffeeZilla. He's a really nice guy. You know, when I was having a hard day on Tuesday, he texted me, checked in. So that's how you know who the good people are. Shout out to him. And Graham and Sarah Dici. Shout out to the good people of the world. Yeah, it's a good question. You know, the fibs. Personally, this market, unlike what we had last year for the indices. See, last year Fibonacci's didn't matter because the Nasdaq and the SPY were going up. Like, look, okay. This is what we paid attention to last year. It's the lines are literally still there, folks. Like, I don't take them away. You know, I leave my lines. It's like my notes from last year, okay? Look, it's stupid proof. We were bouncing around between those lines. We're just like a rising set of making money buying a stupid index fund. That's what we were in 2021. I kid you not. Like, the beginning of 2021 is right, you know, here. And, you know, we bounce off the top. We bounce off the low. And I know there are fibs here right now, but that's because of the current fibs, right? Bounce off the top, bounce off the bottom. Try to get to this. I also had this sort of intermediary rising line here, rising trend line here. We bounce off that. We bounce off the bottom. We bounce off that rising intermediary line again. We go back to, we slightly break above, can't hold it. Where do we go? We go right back to the bottom line. Then we go to the top line, bounce off that. Then we go to the top line, bounce off that. And then where do we go? We bounce off that bottom line again, which I remember when we were at this bottom line here at the beginning of 2022, and everybody's like, oh my gosh, this is it. Like, we're just continuing on this channel. And then when we broke that, it's like, oh crap. Like, wait a minute. This is a problem. Oh, and look, this is January 18th and 21st. These days right here, when we broke that trend line, I'm like, oh shit, what's going on? Like, that's when I'm like, oh my gosh, wage price spiral. Consumers going to stop spending. This is a disaster. Right. And so I sold. And I know that seems crazy, but when we broke that, I'm like, this is terrible. So I sold. And I bought back in after this triple bounce right here, which I said when I sold over here, I said that I would probably buy back in entirely before March 15th. When I saw this triple bounce literally before March 15th, and I'm like, that's all I need to see. I mean, thanks for the question. Appreciate it, JR. But I mean, like, yeah. Yeah. And now everybody's like, well, you're just a trader. I'm like, dude, no. Like, I'm just trying to lose less money in this market. And it worked out. It worked out great. That doesn't mean it's not painful. It's a crappy market. I mean, like, hey, look, if I was perfect, I would have sold over here. You know, I'm not perfect. Anyway. Is this the guy who didn't know what Upstart was?
There's kind of two Amazons right now. There's the mature e-commerce business that has very modest growth. And then there's a cloud computing high margin effort that continues to do amazingly well. And then somewhere in between, there's a strong advertising business. We've now had 2 quarterly disclosures on that business. So there's kind of two Amazons. I think the cloud computing and the advertising warrant the buy, but I'm very nervous about the e-commerce business.
Right. That North American retail operating loss got people's attention. But then you're right, AWS up 37. Is that going to feed arguments for a strip out of AWS, or is that sort of?
No, that's not the same guy. That guy is not the same guy as that guy. Yeah, no, he's got a different set, but he's got like the bookshelf too and the glasses. But that guy's got more of like, this guy's got more of like the triangle head. Okay, yeah, because that was the guy who like mega embarrassed himself when they're like, oh, so so what does Upstart do? And he's like, because he's brag. He went on CNBC. It was like the best clip ever. Maybe if I could find it, I'd love to show it to you. If you don't remember it, it was the most hilarious clip ever. Basically, the guy's like, oh yeah, we just invested into Upstart 4 days ago, and it's up like 25% already. Yeah, it might come down a little bit, but we're killing it. Meanwhile, it's at like $380 a share, right? Upstart right now is at $82 a share. Anyway, so I can't find it right now, but anyway, they're like, oh, that's so great. So, I know what like Tesla does because you're in Tesla, but what does Upstart do? And the guy's like, what does Upstart do? Yeah, like what do they do? What product or service do they sell? Like, I think I'm losing you. It's the most hilarious thing ever. Oh my gosh. It's just like I tweeted the other day, and I really believe this. I really believe this. And somebody like got mad at me for this, but I thought it was great. Where was it? I remember what I said, but I want to find it because I want to get it right. I can't find it. Yeah, well. So anyway, somebody's basically like, oh, I remember what it was. It was when the Tesla article came out, which I think was on the 27th, which was on Bloomberg. And it was basically like, oh, Tesla's the next stock to potentially drop 40%, right? Yeah, here it is. And the Bloomberg writer suggests that, oh, Tesla's not diversified enough. 90% of their revenue comes from making cars. Geez, imagine that. Anyway, and then this person goes, you really think one article could drop the stock 7%? And I go, and they also in the article talked about like, hey, and if Elon sells, that's bad, right? Which he ended up selling, obviously. And anyway, so I mean, it was a good article because it was really playing on those fears, like, oh no, it doesn't have diversified revenues. Oh no, Elon's gonna sell to buy Twitter. What if he's distracted, right? And so I wrote in reply, I go, you'd be surprised how impressionable these fund managers are. No brains themselves. And I know that's like really offensive to like the industry, and I'm sorry, but like the Doomberg does tell people exactly what to think a lot. And so I read the stuff and I try my best to remember, like, they're not God, they're here to provide me a different perspective. But anyway, that's what I think when I'm reading. Okay, wait. Because I just typed in Upstart CNBC, like embarrassing or fail or whatever it was. A CNBC Upstart interview. Y'all haven't seen this? I can't find it. I just get the CEO. Oh, I found it. CNBC expert can't answer why he invested in the company he does. It's a minute long. Okay, we'll end on this because it's like, this is like must-see TV. If you have not seen this, you need to just watch.
Why those four
here
putting money in right now include Upstart, that is one, Tesla, MGM, and AIG. Why those four, all of which you've bought within, well, basically this week, except Tesla, end of last month?
Yeah, so Upstart's up about 25% just in 4 days since we bought it. We bought it on about 4 days ago. So that's actually made a nice little move in the short term, probably a little extended right now, but longer term, that's a good looking name. Very powerful, very strong earnings. These stocks are.
What do they do?
Really
I don't even know them. What do they do?
Excuse me?
What does Upstart do?
Well, I'm sorry.
What kind of company is it?
Yeah, I'm not. You're breaking up.
Oh, well, I guess we've got an audio problem there, Mark. I'm sorry. I do know MGM, I do know Tesla, and I do know AIG, but a 25% move in a week is pretty good for the company Upstart. Thank you, Mark, for your time. We'll have you back soon.
Anyway. Dude, come on, man. It's like the best thing ever. All right. I got to leave it on that one. Thanks for being here. See y'all.